Hi, I'm Monk and this is the Monk Way. I'm a huge fan of index funds, so let's look at a good one. The Nasdaq Index, a very technology-focused combination of stocks. We'll look at their growth, the average value numbers, and the companies inside, then compare it to the most well-known fund, the S&P 500, to see which is better. I'll also include a few example exchange-traded funds you can buy today. Subscribe and hit that bell for more stock analysis videos. I make them every day, and leave a like if you're mostly invested in technology. So what is the Nasdaq Index exactly? We know market indices is a combination of many stocks in one. The S&P 500 has 500 American companies, which represents the American market as a whole. The Nasdaq Index is more focused on the technology sector, with 100 American companies. The fund we're looking at is the Nasdaq 100, which is different from the Nasdaq Composite. A simple ETF you can buy is the QQQ, with a dividend of 0.74% and a fee of 0.2%, also available in Canada with the symbol XQQ. This one has around 100 companies, so let's look at the top holdings. You'll see why this is a favorite of technology lovers. We have huge companies like Apple, Microsoft, Facebook, Google, and Intel on top, with Amazon, Netflix, Comcast, and Costco too. That's 54% of this index, all companies I trust and would invest in. Then we have other names like Nvidia, Adobe, PayPal, Micron, Applied Materials, and eBay. With gaming companies like Electronic Arts, Take-Two Interactive, and Activision Blizzard. These are all stocks I have great interest in, so holding a combination with all of them just feels good. A few more notable names include eBay, Fox, Tesla, Starbucks, Gilead Sciences, Kraft Heinz, and T-Mobile. Now let's look at their numbers. A nice 141% gain in the past 5 years, 64% in the last 2 years, and 25% in one. This is double the S&P 500 in gains, which saw 70% in the past 5 years. They have a similar PE ratio to the S&P 500 of 25.83, a higher price to sales of 3.68 compared to 2.18, a higher price to book of 5.64 compared to 2.85. It seems like the Nasdaq has less value, but it's expected with more technology stocks, but with all those gains it's hard to say they're not doing well. Let's see how some of the top companies performed. Apple is up 209% in the last 5 years, Facebook saw a crazy 720%, Google was up 157%, with Netflix up 1000%, and we all know Amazon also killed it with 500% in returns. Basically a huge chunk of the companies made a lot of money, and because they're so technology focused, they beat the S&P 500, which contained other sectors as well. Now let's see how they handled the last market crash. We can see here that they crashed much harder in the dot-com bubble, but in the 2008 crash, they didn't dip as hard as the S&P 500. They recovered around December of 2010, while the S&P 500 only went above their highest point in 2013. People say this index is more volatile, but it seems to be performing better. A technology crash can definitely happen again, but not nearly as bad as the 2000 bubble. We know Warren Buffett recommends the S&P 500 for the average investor. Just investing $350 a month will make you a millionaire in 35 years. The American index goes up 10% a year on average, but the Nasdaq has gone up 14% a year for the past 10 years. This means you can become a millionaire in only 30 years, that's 5 years earlier. Of course, past results don't guarantee future ones, but technology definitely isn't going away. So why doesn't everyone just invest in the Nasdaq 100 and get at least 50% more returns a year? With more gains come more volatility. It's much safer to invest in 500 companies than 100 companies. Technology stocks are high in numbers right now, so the next crash could see a huge drop. When small profit companies like Netflix and Amazon crashes, this index will not do well for a while. This index fell 80% in the 2000 crash. This is not likely to happen again since we understand the internet better, but it can definitely crash harder than the S&P 500. If you were investing long-term and think technology will be the future, then the crash won't really affect you because it'll bounce back up. If you think these companies will perform and stay healthy for the next 10 years, then it's definitely one way to get higher than market returns. Personally, I just bought $88,000 in the Nasdaq fund with the Canadian ticker symbol XQQ. It's fairly risky since we might experience a market crash in the coming years, but I do have a limit to when I will sell it. If it goes below a certain percent, it's a sell for me. It's been a volatile few weeks. So far it's up $600, not much movement. An investment of $100,000 5 years back would see a return of $145,000, giving me a total of $245,000. The same investment in the S&P 500 would see $84,000, giving me a total of $184,000, a $61,000 difference. If you were in my stock market group, you'll get instant updates of when I buy an index like this, including my real stock portfolio of over $200,000. I show you every single buy or sell I make in the market. Recent winners include Best Buy at 7.5%, PayPal at 5.2%, and a new stock at 3.4%. These are all under 1 month. Don't miss out on my 2 new stock buys that might go up very soon. Look in the description for a 50% off coupon that lasts a lifetime. Today is the last day of the sale. then it will be full price for life. Subscribe and hit that bell for more videos about passive investing. I make them every day to keep you safe. And leave a like if you're an index fund investor. Keep watching to buy safe stocks, the Monk way.